All right, we're recording now. So I am here today to talk about some farm tax considerations, and I'll share with you a little bit of an acknowledgement here. I am working with the Agricultural Finance Tax and Asset Protection Program. It's a nationwide program sponsored through the USDA, and we are doing national trainings. So this website here, agftap.org, and that has a number of resources available to you. This is also for information purposes. I am not an accountant and I do not have a CPA license. I work with producers in the area of farm management. And I would say that each farm and tax law, it's just so very specific to each person and to each farm. And so today I would call this tax information and recommendations, not tax advice. So definitely follow up with questions as you work directly with your accountant and professionals. So these are the ones that I posted in the chat. Very, very helpful. These are annual publications that the IRS puts out. The Farmer's Tax Guide, publication 225, it's updated every year. On the website as of today, 23s has not come out. So that'll soon be coming out as you make plans for this tax season. Does a good job of sharing changes in the tax law, things to be aware of. So generally the first couple pages do share updates or any changes. Next is the Schedule F. That's the Form 1040, and that is the profit and loss from farming. And that publication is at this URL. And then there are instructions each year that go along with that Schedule F. Would highly recommend reviewing those on a regular basis, on at least an annual basis, as you're putting your tax and your forms together. So the first thing, and the Rural Tax Guide and the Ag FTAP program that I was mentioning, I have a lot of questions, especially through our beginning farmer program, about what a farm is. And I often tell people a farm is defined very differently depending on what agency that you're working with. And so by the IRS, this is a direct quote from publication 225, right out on its page number 1. You're in the business of farming if you cultivate, operate, or manage a farm for profit. So that is a big deal, that you are actively searching to make sales and to have a profit on that farm, either as an owner or a tenant. Farm includes, and then these are the list of things that farms include. And again, that's listed in publication 225. At our Rural Tax Guide and on the Rural Tax information, there's a number of details into what is a farm, what is farming, and the comparison of hobby and farming. And so when you do enter into as a business and you've decided to make farming a business, there's some clear things that you should do to delineate it from being a hobby farm. And so those are some record keeping, perhaps it's a business plan that you've put together, but you're delineated that you're going for a profit. I also shared here some of the other definitions that you might see of a farm. So the USDA Ag Census says that a farm's defined as any place from which $1,000 or more of agricultural products are sold, and normally would have been sold during the year. And then if you work with any USDA NRCS programs, they might even define that more specifically, number of animals or some of those things. I also popped in there our Talbot County code or zoning code. As far as Talbot County is concerned, your agriculture and a farm, if you have 5 acres or more in cultivation of land, poultry, livestock, or any agrarian activity. So I think it really is important when you talk about a farm is you understand the definition that they're using farm for. And it's very different from the IRS compared to the USDA, compared to possibly zoning codes. And there may be even more than this. So back to taxes, and you're a farm, you're going to file a 1040, that Schedule F form. There's some accounting procedures that you want to make sure that you're aware of and understand. And each taxpayer, you need to use a consistent accounting method. And so for farms, we kind of divide those into, well, not for farms, but in general, there's either cash or accrual accounting methods. Farms most often use the cash method, and that is reporting income in the tax year you receive it and deducting expenses in the year in which you pay the expenses. So that's the cash method. And you will be asked on your 1040, what method are you using? For sole proprietors, for small business, for small LLCs, you will probably use most often the cash method. The accrual method is when you report income when you earn it. So you may not have received it yet, but you've earned it through a service or a sale. So you've made the sale, but you've not received the check yet. In accrual counting, you would record that income. Same with expense. You may have incurred it, but you haven't paid it yet. That would be an accrual method. There is a separate IRS publication that goes into these accounting periods and methods. So it's at least important to understand that there are two types of accounting methods, what the differences are, and then which one you'll be using for your farm. In your personal life, more than likely, you're using the cash method. It's the accrual or the when it comes in, you record it. It's there in your bank statement. So again, those are two important accounting terminology to understand, especially if you're going to be working, when you're working directly with your tax advisor. Okay, so let's jump into the Schedule F. And I've got some screenshots here as we kind of go through the different portions of it. And so you can see here, you've got your name of proprietor up here. You have your social. You'll have a principal activity. This section A here, we'll share that in a little bit. And then if you go into C here, you see cash or accrual. So you'll be asked to check that and know that. There's also an employer ID number, an EIN number, and this is something if you haven't done, you may want to apply through the IRS to do. A quick search of IRS EIN numbers, you can find out how to apply for it. It's fairly quick. And the nice thing about having an EIN number is it keeps you from having to use your social security number when you work directly with businesses if you need to be designated as a farm. And so you can go through that process, and I would highly recommend if anyone's getting started, and especially if you're operating as a sole proprietor, that you get an employer ID number or EIN number. All right, so this top section again is getting some information and making sure that they understand what your farm is, how you're recording it, who you are. And then they're going to want to understand if you've participated in the business, and then if you'll be filing any 1099s. Because as a business, if you have any contractors or people that you'll be sending out 1099s to, they want to track that and make sure that those individuals are also reporting income. So that is an important thing to understand with the 1099s. Again, a lot of information out there. 1099s are contractors, not regular employees. So if you hire someone, say that's doing hauling for you, they're not a regular employee on payroll, but they would be a 1099 employee. They have their own business. You've engaged with them for over $600, and they will be doing that work for you. So make sure there's a clear delineation there, and that you have that conversation again with your tax advisor about 1099 employees. The next section after this introductory kind of A through G here, you get into part 1, which is farm income. And again, you see that cash method that's listed here. If you're doing the cash method, you would complete parts 1 and 2. Accrual completes actually a whole different section of profit and loss from farming. Accrual people would be, businesses would be mostly corporations, farms that have maybe multiple generations that have gone through the incorporated process of business entities would use more than likely this accrual method. Today, we are going to talk about the cash method. And so in farm income, you can see how the IRS lays out 9 different ways that a farm can receive and needs to report farm income. And so each of these has a very separate section. And then there's even some lettered sections that outline some adjustments. And so an example is sales of purchased livestock and other resale items. That's 1A. 1B is to be able to deduct out that cost basis or purchased price of those items. So the instructions will help you walk through each of these sections. Most often, you'll be filling out, if you've got sales of livestock, produce, grains, and other products you raised, that would be line 2 here. And you can see that would probably be, for most farms and small farms, that would be probably the largest revenue generator and where you would be putting the most income into. Other examples of income could be cooperative distributions. So if anyone is a part of a cooperative that gets like patronage, you could receive those and you would claim those and report those in this section. Anyone that's part of crop insurance proceeds, any conservation payments, those are all included in here, as well as custom hire or income from machinery work. So those would be the types of income that you may see in this part 1, and then you would sum it up on line 9 here. All right. We'll move into farm expense, and if you do have questions or comments, again, hopefully we could definitely have a conversation at this point, or at the end of the session, we'll open it up for questions. But I'll move forward at this point to farm expenses. This is part 2 on your Schedule F. And you can see here, there's going through, there's about 36, you have 10 through number 36 to go through the different types of farm expenses. You do not deduct the following, and this is right out of the instructions for the Schedule F, any personal or living expenses in here. So that would be off-farm income taxes, insurance, repairs on your home that don't produce farm income, any expenses of raising anything you or your family use, the value of animals you raised that died, any inventory losses, and any personal losses. So this is directly out of the IRS publication. And you can see here, some refer to other forms, such as here, number 10. If you're going to claim car and truck expenses, there are very specialized instructions for that, whether you use mileage or you're going to do the car expense, like your payment on your car and fuel, you need to use a form 4562. And then some categories are very large. So something like chemicals, feed, fertilizer, something like supplies, or this other section. There could be a lot of different types of expenses under there, depending on the complexity of your farm. I would definitely say working with a tax advisor as you have employees, as well as are trying to deduct some depreciation. It's going to be very important that they understand the tax law and the best opportunities for you to claim certain expenses and the way to do that. So that would be a strategy that you would want to have some discussions with your tax advisor. All right, so since we were talking about the cash and accrual method, we do skipped part 3 and 4 because, or part 3, because that's the accrual method of measuring your income. We have part 4 here, that's principal agricultural codes. This goes up on your Schedule F so they understand what type of either crop production, animal production, or forestry and logging that your business is part of. And there have some very specific ones, and then they have a couple catch-alls that they have here, like other crop farming and other animal production. Also on the instructions for the Schedule F, the IRS is wants to let you know that there is time needed to complete and file these forms and to have these records together. And they actually estimate the burden of individual taxpayers filing forms. And I thought it was kind of interesting because we do emphasize the importance and need for good record keeping, understanding the law and how it applies to your farm, and then preparing and sending the form to the IRS. So I thought these hours were very interesting and quite specific when you get down to, 3 minutes or 6 minutes that it takes to get these forms together. And they also are asking for any feedback if there's suggestions or to make the form simpler, or they'd be happy to hear from you. So I thought that was a very interesting assessment here as part of the Paper Reduction Act, that they have the record keeping and understanding the tax code. So talking a little bit about record keeping as part of your Schedule F, we talked about the need for the essentialness of having complete records. The more time spent getting organized and a system in place, it will be easier for you, farm partners, and your accountant to put these together, to spend time preparing your tax records and filing for the upcoming year. It allows quick access to information. So if you are trying to look up how much you spent in feed this year, or making some estimates on the sales generation from a certain enterprise, having good records would help with that. Also, 1099s, any contractors that you're using, you do have to file those. Anyone that you pay over $600 needs to receive a 1099 from you. And if anyone pays you over $600, you would receive a 1099 from them if they are a contractor. And so it's important to have these records in place so you're able to get the records completed and filed. Setting aside time on a frequent and regular basis to do financials is very important. Record keeping, understanding accounting procedures, being able to sit down and do this, whether it's carving out, every Monday morning or, Saturday mornings that you want to sit down and do this, but it is very important to keep track of those financials. The next is available reports can help make important and major business decisions. And so there are looking at purchasing, looking at hiring employees, having good records in place would help you with that. So a chart of accounts is the one thing that often we look at the Schedule F, and something like other is just a big catch-all category, or supplies. That could be a lot of different things. And what do you need to track as far as the farm business goes? So a chart of accounts lists the accounts that the farm selects to track the balances and to enter those into the Schedule F. These will vary business to business depending on the type of business and information needed. So an example is, I've seen recommended ones out there. A lot of software has recommended ones. Well, say I only do crop production. I don't do livestock. I'm going to delete out or not use veterinary expenses or feed because I'm only involved in crop production. So the chart of accounts are very customized for you and your business. So selecting income and business or income and expense accounts, they do need to match the Schedule F so you can complete it. And computers and software make it much easier to track and run reports and get those those big summation to be able to enter into the Schedule F. So I sat down and kind of created what a chart of accounts might be for an example farm. And this is accounts and sub-accounts. So I wanted to show some examples here of how you might set up, or a farm might set up, a chart of accounts. So in the income section, you see sales here, this line 2. This is all sales that you would do from a product. So if I was growing, or if I was selling eggs, growing grains, selling cut flowers and vegetables, perhaps in my chart of accounts, I want to separate income out in those 4 sections. However, at the end of the year, I would sum those up and enter them just in line 2. Same with custom hire. Perhaps I do some bush hogging and snow removal, and I would add those into as income there in the schedule on number 7 as custom hire. And perhaps I want to break those out. Maybe I don't do enough. Maybe there's 3 transactions a year that's custom hire, and it's easier to keep those together. Wanted to share some expense examples. So in my farm, maybe I only have chickens because I have eggs. So I'm just going to keep my feed line just simple. It's just feed. Perhaps if I had livestock with grain and hay. So maybe I have a grain sub account and a forage sub account that would keep feed and be able to add feed together to enter line 16. Insurance is number 20. And so perhaps I have crop insurance and farm liability insurance for my farm. And so I might want to separate those policies out. Perhaps they're with different vendors, and I want to know how much I'm paying for each one of those. So while insurance is one line on the Schedule F, perhaps I want 2 sub-accounts so I can track that. The next is repairs and maintenance. So that's another example I wanted to show, line 25. Perhaps I'm going to have repairs on machinery, and then I'll have repairs and maintenance on the buildings and structures I have. And so I may have 2 sub-accounts there, or perhaps I just have, parts and labor is how I might divide it up. So again, these are very specific to your farm business, and I encourage you and empower you to sit down with the Schedule F and thinking about your farm records and what types of accounts and sub-accounts would be helpful to track to be able to make decisions and to better keep your records. The last one I'll share is the supplies, line 28. So again, a big catch-all, as well as 32 in the other expenses. So supplies, perhaps I'm going to have office supplies. Maybe it's for my poultry, then my crops, and then maybe there's just some general farm supplies that I purchase. And I might break those out into multiple sub-accounts that would then add up to line 28. So this is called a chart of accounts. If you use certain financial software, they're going to want you to set this up. You can add more as you go. But again, I would, don't be so specific that it's hard to manage, but you also want to be specific enough that you can make good decisions on. And so some of the financial software, if you tell them you're in the business of farming, it'll download like a suggested chart of accounts, and then you can modify it as you need. So this is just what a check register might look like based on maybe those examples I was showing. And so I would write down the date of the transaction, the check number, the payee is Feed Place Incorporated. The account would just be feed because I only have chickens. I paid $349.56. And then I'm going to make a good memo in there so I understand what happened. It was chicken feed month of July. So I purchased it in June for July. The next is a deposit made on 6/21. It was farm market sales, and I had income, and perhaps I'm going to split it. I want to know my income for eggs and my income for cut flowers. So here I have one total deposit, but I'm splitting it for eggs and cut flowers. And this would be at the Town Hall Farmers Market on 6/21 that I attended. The next one on 6/25 is a point of sale. I went to the farm supply store and I needed to purchase some chicken supplies and general farm supplies. So this is another split. Most financial software, you could do this quite easily. You can split the accounts. And I spent $26.25 on my chicken supplies. I purchased a new feeder, and then general farm supplies, $264 with some shovel and parts that I needed. So that's how you might utilize an account and sub accounts. And then at the end of the year, if you're using some kind of software, if you're using Excel, you can do some calculations to be able to add up those. I also can make some decisions and see how much income, how much income did I bring in from the chickens and how much did I pay out from the chickens? So I can do some enterprise planning too, by using the categories in the Schedule F, my chart of accounts, and then some really good record keeping. So then the next steps I would encourage you is to download IRS publications, the 3 that I shared in the chat, and I'll share those again. I would definitely review sections that are pertinent to your farm. So each one of those, it goes into great detail. It references other publications. Perhaps it's mileage, perhaps it's employees, perhaps it's accrual and cash method. It will reference you to those as resources. I would review the income and expense sections of the Schedule F and look at those instructions. And then I would really go back, either if you haven't done so or you have a chart of accounts already, really look over the accounts and sub accounts and make sure that they're working best for you. 1, ease of record keeping, but also 2, in decision making for your farm. And then 3 is schedule regular times to work in the office, reviewing statements, finances, accounts, and record keeping. And I might add a 4th here is take some time to schedule with your accountant before the end of the year so you can do any tax planning. Oftentimes we don't plan before the end of the year. So any planning that you can do before December 31st for the farm, and then get a head start in January as you look for the 2024 crop. With that, I'd like to share some resources. This is the Rural Tax Education. It's ruraltax.org. This is a really great resource. Actually, the advisors that are on this actually help write Publication 225 for the IRS. They've got some sample tax returns. They have some great tax guides for new, beginning, and small farmers. So I would really encourage you to check this website out and browse it. And then I also have some other resources in here. There's some interactive Schedule F that have some great videos with it. So with that, I'm going to go ahead and put all of these links that I have in the chat, and they'll also go out as an email to you when you're finished, when we finish the recording today. And I'd like to ask if anyone has any questions, perhaps share if you've experienced any of these, the tax processes, or any recommendations or tips that you might be using that would be helpful. I also have an evaluation. It's the last link here. If you would like to fill that out, that's part of the USDA Ag FTAP program. Okay. I'll stay on. I'm going to go ahead and stop recording, but we will stay on.